For those who invested in Oak Special Fund at the beginning of the year 2025 and those who invested in 2024, you guys enjoyed a growth of 4.66% quarterly growth. That is amazing returns. And to put it into perspective, this is an 18.64% per year. This is annualized return. It is 18.64%. This is a great number considering that the rates of government securities are currently very low. So how are they able to achieve such returns, and will they be able to maintain this kind of returns throughout the year? Let's find that out. We start with the structure of the fund and a small definition of what Oak Special Fund is for those who are new to the fund, and for those who are already in this fund, you have already invested in this fund. Let us know your experience in this particular fund. How is the customer service? Is it good? Let us know in the comment section so when you're going in, we know what to expect, okay? And guys, before we proceed, please don't miss out on financial education and investment opportunities. We have a lot of investment opportunities and you'll miss them if you don't subscribe to this channel. So remember to subscribe to this channel if you have not done so yet. So, Oak Special Fund is a collective investment scheme, meaning they collect money from different investors and they invest in different assets. In return, you as an investor, you earn some interest from the money that you have invested, meaning you will earn interest without having to do all the hard work that you need to do when you're investing for yourself. So all you need to do is to just create an account, provide your personal documentation, and you let the professionals do all the work for you, the work that they do, the work that they are paid to do. So that is all you need to start earning and to start investing. This is a fund regulated by Capital Market Authority and it is managed by Faida Investment Bank. The fund was launched in 2024 and it gave a return of 29% in 2024. The fund manager has been in the market for over 30 years now and they have a wealth of experience in financial markets. They have done notable work in investment banking, including facilitating IPOs of major companies such as Safaricom. And you can check this out. You can check the experience of Faida Investment Bank and see how much experience these guys have, okay? Now, let us look at how does this fund work, okay? So when you invest your money or when the investors contribute their money in this particular fund, the money is invested in different assets. And I'm going to attach this screenshot here. And as you can see here, this is how they invest your money when you contribute your money with them, okay? So they invest in both global and local markets. And this is what makes this fund a special fund because they can invest in different things. And they invest in things that they feel will earn you better returns as an investor. And to better explain this, let's first understand how unit trust look like. So this Capital Market Authority has a guideline on what unit trust should invest in. For example, a money market fund is supposed to invest in short-term government securities and short-term corporate papers, yes. And according to the CMA, they cannot invest in risky investment because this is supposed to be a safe investment and it's supposed to guarantee capital preservation, all right? And they should also diversify the investment to protect the investors' money. Now, for special funds, they invest in high-risk investments, but are supposed to diversify the investment to reduce or to mitigate the risk of losing your money, meaning it's less riskier than if the investor or you as an investor, you invested into those particular instruments directly or to those particular assets directly. And because they are dealing with a lot of people's money, they have an obligation to mitigate the risk while maximizing the returns. So they diversify the investment to make sure you as an investor, in as much as whatever you're investing in is risky, that to some degree your capital is protected, all right? So in addition to that screenshot that I shared of how they or where they invest the investors' money, here is a specific asset allocation of where they actually put your money, the percentages or what percentage goes to what, okay? So I love that they have now included this because now we know what percentages goes to what. I love the fact that they have the largest portion in the government securities. You can see that it is at 62%. Yes, they have 62% in government securities, which adds to the idea that your money is protected to a certain degree. Yes, this means that you will not lose all your capital in this particular fund if anything happened to the fund, because the most capital is invested in government securities, which are ideally secure. I would also like to add this because I think it's important. In their investment strategy, the special fund, most special fund, actually all special funds, and now Oak Special Fund, they do what we call active trading and margin trading, meaning that they make money even in volatile markets. And this is the reason why they are still able to get good returns in the midst of bleeding markets. Shares markets are not doing very well currently, and you can see even in such situations, a special fund is still giving good returns. So meaning with active trading and margin trading, they can be able to leverage that to make money even when the markets are going down. Active trading is when you make money by predicting where the markets will go, either up or down. And I'll give an example. For example, we have Safaricom shares. If someone is doing active trading in Safaricom shares, that person will predict that the price of maybe Safaricom shares will move from 15 Kenya shillings to 20 Kenya shillings. If they are right, they make money. If they are wrong, they lose money. If done by professionals, they can make good money because they analyze the market based on what is happening in the economies and based on past performance of the particular assets they are dealing with, and they are able to predict right most of the time. All right. Now, the next thing that I would like us to look at is the risk of investing in this particular fund. I know this is an area most people are interested in, given that this fund is giving a lot of returns. So people are interested to know, how safe is my capital, or what is the risk involved in this particular fund? And as we have seen, this fund invests in risky assets, but the level of diversification minimizes the risk of you losing your invested capital. The fund does not guarantee capital preservation, meaning that in certain rare situations or circumstances, you can actually lose a portion of what you invested. Not all your capital, because we have seen that they have invested 62% of the investors' money in the government securities, unless now we have government defaulting in paying these securities. If in any other situation, whether the markets are going down or there is something that is just happening in the economy, your money will still be safe to a certain percentage. Yes, so basically you can still lose your capital to a certain percentage in certain circumstances, but these are very rare circumstances where we are having global crises, we are having things that are not predictable, because remember, these are professionals and they analyze the market, they analyze what is happening in different economies in the global market to see or predict how these markets will go. Okay, so it means that their aim is to preserve your capital as they maximize the returns through diversification. So remember, guys, these are rare occasions, and it would only happen if there was a very bad situation in the economy or this fund manager went out of business. All right, that being said, this fund targets a return of 20% net of fees, and these are projected returns and what they aim to give the investors. However, you need to understand that this rate can be lower or higher depending on the season and how the markets are performing. So this amount is not guaranteed, it's projected returns. Okay, and this is where we say that the past performance does not guarantee future performance, meaning that the rate can go up and can go lower than this. All right, I will also like to share this on how the fund has performed over time, and you can see here we have quarter 2024, quarter 1, quarter 2, quarter 3, quarter 4, and 2025 quarter 1. Yes, and you can see how these markets perform. This fund was launched in 2024, so we only have data from 2024. Okay, And below here, you can see the month-on-month performance for the year 2025. This is because we had seen the return of the whole quarter of 2025. Now this gives you an idea of how it performed in the month of January, February, and also March. For 2025, we have absolute return for that particular month, and then we have annualized return. So now that you know how these particular funds work, let us look at what you need to start investing. We also look at some of the other details of this particular fund. And I will attach this screenshot here so that you can go into details about this. And from this screenshot, you can see that this fund was launched in February 2024, and it is a Kenya shilling denominated fund. The minimum investment is 500,000 Kenya shillings. The minimum top up is 50,000 Kenya shillings. You don't pay to withdraw. Lock-in period is 6 months. The management fee is 6% per annum prorated. Prorated means it is adjusted. It is adjusted to fit the period of time that you have been in that investment. So if you go in mid-year, it means that you're not going to pay the 6%. It means that you're going to pay the percentage depending on how long you have been in that market. The benchmark is average of 30%, 364-day T-bill, plus 30% NST all share, plus 40% S&P 500, which is very amazing, yes. The asset under management is 2.71 billion Kenya shilling. Now that you know what you need to start investing in this particular fund, I like ending the video with some numbers so that you understand what to expect when we invest. So if you invested 1 million in the beginning of the year 2025, your account would be having an extra 46,600 Kenya shillings. This is in interest, which would be compounded for the next month's return, yes? So this fund does compound interest, and it compounds your returns on a monthly basis. Also, you're going to be getting your statement in a monthly basis. Let me know in the comment section whether you'll consider investing in this particular. And here is my number if you're interested in a one-on-one session. I do financial education for those people who are interested. I also cover cryptocurrencies and all things about investment and financial education, okay? You can also consider watching this video where we talked about Mansa X returns for the first quarter of 2025. Happy investing. See you in our next video. Bye.